Hello everyone and welcome to today's major markets update video for Thursday the 20th 2023. I'm doing this video today in lieu of we didn't have yesterday's video because I was unable to make it, and I won't be able to make a video tomorrow either because I will be volunteering at my son's high school, and I don't know how long it's going to take, and simply sometimes life gets in between things. And this video, I think, is highly needed at this juncture because there's so much changes going on in the market, especially for the NASDAQ, which has been tremendously range bound. So is, of course, the Dow Jones. So we get this constantly flux in wave counts where it looks like we have a 1-2 setup and it gets pretty much annihilated the next morning. And then we have another potential 1-2 setup, which also gets annihilated the next morning. But key critical levels have still not been broken to the downside. So that is always very important. Whereas, for example, for the cryptos, some key critical levels had been broken to the downside. So those required a substantial change of thinking. So remember, we anticipate, monitor, we adjust. Clowns and idiots and retail investors think that I sum it all up under the same. Because a lot of people are disappointingly limited mental capacity people. They just don't want to learn. Sorry, rant over. But I think markets are linear. And that's not the case. They constantly change. And that's life. Life changes all the time. So let's have a look at the charts. But before we do that, this is the bottom line from a week ago, okay, the 14th. It still remains highly relevant and haven't changed anything actually to it. Back then, we were thinking that a ending diagonal wave 5 was forming. So far, this is still possible. Okay, still possible as long as we hold above today's low and especially 4,070. So that could mean that this wave 4 is now still underway and could have bottomed. That's why it must today stay above today's low. And diagonals, in this case, it will be expanding ending diagonal, are extremely overlapping and very hard to predict. That's what we're currently seeing. NASDAQ 100, as I said a week ago, remains essentially range bound. Still, I haven't changed any of the text. Okay, we did have the potential wave 1 top, and we dropped for the wave 2. Now, this wave 2 might have been drawn out completely in time and space, and I'll show you that in a moment. Bottom line is, as long as we hold today's low and we break above today's high, then we should expect these 13,500s. But we can also still get this diagonal for wave 5. Below today's low, and 12,800s are next, again and again and again. So nothing has changed since then. That's just because we're so stupidly range bound. It's very frustrating, but it is what it is. I don't make the markets. If it was up to me, the markets would always be trending, very clean, clear impulses up and down, but that's not the case. Most of the time, it's not. And the Dow is likely to go for green wave 3. It should be in green wave 4 to it, ideally this level of 34,000, 3,320. All right, and below 3,320 increases the odds for when we've got 3 waves up. So nothing has changed. We're not even below 36,000 yet, but we touched it today. Market breadth is still positive, but we now have initial sell signals. Okay, we had no sell signals last week, and now we have initial sell signals. So it's getting long in the tooth, as I said last week as well. So not much has changed, honestly, other than this constantly, is it a 1-2 setup? Then most of the time, the 1 is a C wave of a B wave. That's the problem. We see 5s up, and it's a C wave. I'll show you that in a moment. And again, no update tomorrow. I will be unavailable. Bigger picture, etc., etc., etc. So here are all the structures. Please read them, and all the ways you can use me to your advantage. Please do so. These videos are just one of many things that you can use to your advantage. It's so limited. There's so much more to do. Anyway, so here we go. This is the potential AB setup, as I showed you here for the NASDAQ, right? This bull flag potential. Look at the NASDAQ. It has gone nowhere for over a month soon. Let's see here. We in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 trading days. So 3 weeks now, we're back to where we came from. Nothing's happened. Doesn't mean you cannot make any money in this market. There's plenty of rips and dips, to long and short for the short-term traders. And remember, this is not a buy, hold, and hope market anymore. Guarantee you it's not. So please adjust accordingly. So we can still be in this green C wave, and then we get to 13,000 hundreds for the NASDAQ, not the NASDAQ 100. It's of course a different metric, different price, but for the NASDAQ. So this is the alternative we've been tracking, and so far it's still possible, it's just overlapping, messy. And then the NASDAQ will go to about 11,900 plus or minus 50. Here then is a alternative interpretation of this sideways price action, in that we are still in a wave 2. We have not broken below last week's low here at around 12,825. So this is still possible for the 1, and then a very complex wave 2. And now hopefully the starting gates of 1, 2, 3, 4, 5. So this is still possible. We simply had to move this wave 2 further in time and price. Back on the 14th, we could have potentially done wave 2 here. But as you can see, we're pretty much back to where we were on the 14th. Nothing's changed. Not at all. Okay, so this is still very possible. A very complex wave 2. I do not know even what it would be, but hey, corrections can be corrections. So like this would be a flat with a probably double zigzag wave C or something like that. So this is still possible. Again, below 12,850 is the cutoff for the bulls. And then we'll be looking at this potential, which would align, so this is the NASDAQ 100, align very well with the regular NASDAQ, in that the NASDAQ 100 will then also revisit around 12,850. And that is that we are in a ending diagonal wave C of this B wave, A, B, C. Okay, so then we had the A wave, the B wave, and then we're going to get the next rally. Due to this horrendous overlapping price action over the last 3 weeks, this is 2 of potentially more interpretations. I've been shopping around, of course, to other people that I respect in their wave counts, and I've not found anything that even resembles what I have, and everybody has something else. So sorry about that. That's just the way it is. So this is also very possible. I have not seen people with this one. I like it. I've not seen people with this one either. I like it. So if you want to have different wave counts that you think are better, then please be my guest. We can slap 1,000 wave labels on this mess. And none of them will be correct, and all of them will be correct until proven otherwise. So we're still stuck here, literally between 12,850 and 30,150 on the NASDAQ 100. So that is a 300 point range, and that is really not much. That's around 2% range. So please have patience. Break down, you know where to go. Break out, we know where to go. So this is then a slightly adjusted S&P 500 wave count. Maybe I should start. No, I'm not going to start with this one. No, I'm not going to start with this one. This one it is. And I have readjusted a little bit the wave count, in that I have placed the wave 1 label here at this top instead of this top. So then we have all ABCs. So we get an ABC for 1, an ABC for 2, an ABC for 3, an ABC for 4, and now in wave 5. Yes, wave 5 is still possible. Okay. We have, of course, warning signs. We've broken below support of 1433. We got the first warning because we broke below 1423. And now we're holding 4112 because today's low was 4114. So this is still possible to become a diagonal. So the diagonal that we had a week ago here on the 14th is still possible. The wave 3 here, as you can see, top 10 with the slightly adjusted slightly adjusted and interpreted wave count to this 3 and this 4 and now 5. So I don't want to see much lower. If we start to go lower, and especially below 4,085, that is our line in the sand, then this wave count is off the table. So we hold today's low and we break above today's high, we're good. We haven't done that so far, really. We haven't seen any higher highs yet. I want to see it, especially on a daily closing basis. Okay. That would be great. So this is then some very complex double zigzag wave 4, something like that, ABC, ABC. Okay, and then we can still target 4180, 4190. Let's see if I go then to the daily chart for the S&P 500. That would, not this one, match nicely with the ideal upside target for this wave 3 between 4190 and 4285. So we have the 1, 2, 3, 4, 5, as you can see. So we start to go to the local top, and then we get our 5% correction, then a last hip hurrah into the 4300s. Okay, so we do have, of course, this negative divergences to contend ourselves with. So we're really on the cusp of completing this red wave 3 with the possibility that red wave 3 has already topped. So if we simply know that ending diagonals are 3s, ABC for 1, ABC for 2, and this was probably also an ABC for 3, ABC for 4, ABC for 5. And then the 4170 high was all we got, slightly below, I would say, the minimum requirement for 4190, but this is still a counter trend rally, and it can do whatever it wants to do pretty much, as long as there's not too much violation in the sense that 3 is the shortest wave, for example. It's not. In this case, 3 is already longer than 1. And now we're back to 4070, 4040 for this wave 4. Okay, so that's why we have these warning levels. Okay, again, below 4085, 4070, 4040. Very simple. Then we are on our way to here. That is, and if we break below here, again, on the daily closing basis, I always want to see daily closing basis, or at the minimum, right, the hourly closing basis. But please be aware that we now have this potential positive divergence on the daily or the hourly RSI5. Okay, there. So this is the other option. But we haven't broken below any key downside levels because we're back to where we were a week ago. That's why last week's summary slide is exactly the same as this week's slides. Amazing, huh? This is the 5-minute chart. I use this a lot for my trading. I went long at 322. Not bad, huh? I sold it now at aftermarkets. I'm done with this one. It's pretty good. I'm proud of myself. The reason I wanted to show you this chart is because of where we are on the technical indicators on the 5-minute chart. We had here nice positive divergence. That was my trading cue. Boom, not bad. And the MACD on the hour minute 5-minute chart is pretty oversold. You see levels here that oftentimes go inside with bottoms. I'm going to zoom out a bit. Okay, so about -7. See here, this is a tradable bottom. Definitely tradable bottom, for sure a tradable bottom, nice tradable bottom. So this is all of April, not bad. So we're getting pretty close, and we have positive divergence. So this rally into the close from a pure technical perspective, pretty good. Okay, so if we can keep this going, we should be looking nice and dead. But we need to be cognizant of the fact that we can always get more oversold. This is year to date, and you can see the MACD can drop a lot lower. Okay, but the RSI5 is most of the time not much lower than we're currently at on the 5-minute chart. So this is indicative of being close to at least a decent bounce, but that decent bounce can of course still be part of this red wave 4. Alternatively, it is part of this gray wave 5, of green wave 5, of red wave 3 in super detail. And we have this very ugly expanding ending diagonal wave 5 in green of wave 3. So we're still possible. Every single time the bears fail and the bulls are able to not fall off the cliff. But I don't like it in the sense that we're making lower lows and lower highs. So we're really giving the bulls a lot of leeway. At some point it will break. But we have those levels to watch. 4085 is my key level in the descent. If we break below that one, then we don't have a 1, 2, 3, 4, 5 setup anymore, because then 4 goes below 2. That's not allowed, not even in a diagonal. And then we're going to look for this deeper pullback before we start wave 5, ideally. The next alternative will be only 3 waves high. Okay, that said, let's go to the Dow Jones. What can we say about the Dow Jones? It held 3,000 or 33,600 elegantly. So that needs to be broken to target the ideal wave 4 target zone. And as I said yesterday, it appears the Dow Jones is correcting more in time than in price, which is fine, as the wave 2 was definitely a correction in time, price, and then wave 4 might do the different approach and correct in time, as long as we get rid of overbought conditions, and we have done so. Okay, so that's pretty good. I'm not going to say anything about semiconductors, IWM. See nothing there that excites me, or anything that is even reasonably easy to interpret. New lows, how we're doing on 52-week lows. Still okay on the NYSE. Still not okay on the NASDAQ 100, but they're declining, so that's good, but still too high, twice too high. So in this case, the glass is half full. How we're doing on the McClellan oscillator, we are still at positive 14, but as you can see, we're dropping. I still think it's kind of comparable to what we had here in November, December last year. That's the only analogy I really have for a assumed continuation of the uptrend. And of course, we know our key levels, and then we're going to break lower if we break below those key levels, meaning to the next downside target zones. So here's then the summation index, which is the McClellan oscillator as shown here, added to that from yesterday, added to that the day before yesterday, etc., etc., etc. We're still positive, but as I showed you already a week ago, we're getting quite overbought, so long in the tooth, okay? And that increases the risk for downside, but it's still positive, it's still on the buy. How are we doing on the PMO? Well, it seems like it's bottoming out. I don't have data for today, but it looks like we might see a repeat of what we had here in January, where we get a sell signal, bottom out, and then a buy signal. So the 3, 4, 5 setup is still very possible. Alternatively, something here as in November, okay? So we'll have to see, but it remains on the sell. So definitely some weakness going on. Last but not least, the money managers are getting a little giddy again. So that's a contrarian indicator to be determined how that's going to go in the future. But again, things are getting a little bit long in the tooth. So that's all I have for today. Quite nice. I did not really have to update my summary slide. Can still be in an ending diagonal instead of contracting, could be morphing into a expanding diagonal. And we know our key levels to watch. Okay, so please be aware of those. NASDAQ will still have this 1-2 setup in place. If not, then we have the ABC for this bull flag pattern, and we'll target 12,800 for the NASDAQ 100, about 12,000, I believe it was, or 11,900 on the NASDAQ. Dow Jones still looks good for this wave 4, more of a correction in time than price, but below 33,120, and we need to reassess. Market breadth still positive, as I showed you. Do have these initial sell signals for the PMO, so we're getting very long in the tooth. But again, we have not broken below any levels at all. So no time yet to fully turn on a bear hat and short the schnitzels out of the market, because we might get burned. Remember that first mouse gets the squeeze, the second mouse gets the cheese. So we don't want to get squeezed just yet. Take care, trade safe, and I might try to get an update in over the weekend by email if something really out of the ordinary happens tomorrow. Otherwise, take care, trade safe, and I'll see you all next week. Bye.